Tuesday, March 3rd, 2020, MONERO 64, home of alternative economics and contrarian views. So the US dollar, as measured per the dollar index, has joined the party of other fiat currencies. It's starting to sink very quickly this time versus the euro especially. And I think this is going to mark the beginning of a much stronger move higher in gold and silver. I expect, just like in the other fiat currencies, like in the euro, in the pound, in the yen, in the Aussie dollar, I expect the US dollar to make new lows or gold to make new highs fairly soon. I'm not saying it's going to be this week or this month, but in a few months, I expect gold to make an all-time high versus the dollar. And with that, I'm going to introduce you to a new blog that I just started out yesterday. It's monero64.net. And I actually wrote something there yesterday, and I'm going to go through the article about the dollar index and what's going on briefly through it. It's not a long article. I'll go through it. And then we'll look at where the markets are this morning, look at a few other charts. There are some charts in this article. You can go to monero64.net. You can subscribe to the mailing list. I will send people emails when I write a new blog or a new article on the blog. So yesterday, the first article I wrote, there was the dollar index is getting hammered as expectations of Fed easing increase. The expectation that the Federal Reserve will resume cutting rates after having cut the Fed funds target 3 times last year has finally helped the stock market rebound today after 5 straight days of losses in the Dow and S&P 500 index in the last week of February. The dollar index, thanks to the strong euro, is down close to 1% at around 97.20, while the Dow is up just under 600 points or 2.2%. Yes, the Dow rallied even further towards the end of the day. It finished up over 1,200. The other thing I would say, the Japanese yen has been fairly strong of recent. We saw some big drops in the dollar versus the Japanese yen towards the end of last week. Even though the ECB is expected to cut its negative rate by maybe 10 basis points, the Fed has a lot more room to cut. And this is what is probably driving the euro higher versus the dollar today. So here I have a chart of the dollar index, the big move it's making. Well, it's been making actually for the last week or so. So now I go over the cycle of the dollar index, which I've spoken many times about to those of you who have been following my channel for a while. And I say we at MONERO64 have noted that the dollar index topped in January 2017 at 103.82, and that we expect that the current long-term cycle for the dollar index is lower and that it will probably bottom in 7 to 9 years time from the top in 2017. I continue to see continued long-term weakness in the dollar index. I expect us to make a new all-time low and break the March 2008 bottom at 70.69. And I think it will be done probably by the middle of this decade. If you look at the cycles here, they seem to go in 7 to 9 years. So I've got the bottoms and the top on the chart, as you can see. So with the apparent short-term failure in the dollar index, we think the cycle top from January 2017 is still very much valid. So even though the dollar index is still significantly higher than its 2008 low, gold is actually almost $600 higher than its top at 1,032 in March of 2008. And that's why we think we're going to see a huge leg up in gold very soon. There's the gold chart. So to conclude, we think it's the dollar's turn to make new lows versus gold and for gold to break through the all-time high for 2011. Like all the other major fiat currencies have done so far up to now, up until recently. So there you go. So does that mean if you live in other countries, you're okay holding your own currency, seeing that the dollar is going to go lower versus your own currency? No, because gold's still going to keep going up versus your currency as well. So it's 7:42 a.m. London. Yeah, a very good bounce yesterday for the stock market. Yeah, there probably was some official intervention. And I would say, though, if you look at major tops in major markets or even like in cryptocurrencies, it takes a while for the markets to recover after such a big drop. And I will note that volatility, as you can see here by this chart, is still highly elevated. I will note as well that the bond yields are still very low. We made a new low yesterday at 103 in the 10-year yield. We have risen overnight in the 10-year yield. We're back up to 112, but that's still about 20 basis points lower from the record low up until a few days ago at 132. So that's pointing to still economic slowdown, major economic slowdown. So those factors are still out there. So let's quickly look at where we are this morning. So we've got gold up just under $8 at $15.97. High's been $16.01, low $15.85. So that $15.85 Fibonacci level is holding for now. Silver did well earlier on overnight. Got up to 17.01. It's now at 16.78, only up 5 cents. The Dow future right now is down 165, 2/3%. S&P is down 21, S&P future. The NASDAQ 100 future is down 0.75%. Foreign exchange, fiat currencies. Sterling didn't do well yesterday versus the dollar, but today is up 1/4, so it's rebounding a little bit. 127.89. Euros unchanged at 111.25. Dollars down against the yen at 107.94. And dollars up 1/3 versus the yuan at 698.40. I noticed that the Reserve Bank of Australia cut rates today to 0.5% by 25 basis points. So yeah, it's happening. I guess the Fed now has to act quickly. The market wants to cut. They kind of priced in like 3 cuts already yesterday, I would say. Crude oil remains firm. It's up 1.5% at 47.57 WTI. So it looks that right now the market is kind of buying into the fact that central bankers can help in this situation, especially the situation where we've had this crisis in China, and it's continuing to reverberate across the world. I personally think they're going to have a hard time, but they're going to throw everything at it, and that's why fiat currencies are going to drop like a rock, and that's why you need to have precious metals. Just to let you know, there's a promo code for those who want to get physical bullion, and it's MONERO64 at Gold Investments. They're a bullion dealer in the city of London. They've been around since 1981. They're family run. I've dealt with them for almost 20 years. There's also a way to store your own physical gold, allocated and insured in Switzerland, and have a debit card or prepaid debit or credit card, if you want to call it. It's not really a credit card. It's called GlintPay. The referral code there is MarioGlint79. So you can store your gold in your card and you can spend it if you want, or you can store fiat currencies on the app as well. You can lock whatever currency you want to your card. If you're in the States and you want to spend dollars instead of your gold, you can go to the app and lock it to US dollars, or in the UK to pounds. So it's a good way to save in gold and be able to spend it. Some, of course, believe gold should be held physically, and I do as well, but some people like to have the access to it and the technology around it as well. Those are the two avenues that I provide in terms of precious metals. People have asked me in the past where to get gold, and that's why I've come up with the promo codes and referral codes. To finish off, let's quickly look at the chart of the S&P 500 index, and I brought up a weekly chart. So, and it's going back to 2016. One thing I found interesting, I was just looking at it this morning. If you look at the top in October 2018, we had a pretty sharp drop back then. Well, from around just below 3,000 down to 2,700. That was a big drop. But look at the drop we've had now from just under 3,400 to all the way below 2,900. It's a massive drop. To me, it looks very similar to that drop. I know it's a much bigger drop, but we had the same kind of move prior to the drop, like a ramp up in the market. Then we had that drop, and you can see that market stabilized afterwards, but it took about 2 months for it to stabilize. And then later on in December that year, after the flag was formed, it was a bear flag, the market dropped again sharply. And this time it dropped to below 2,400. So it seems to me that we could continue to creep higher over the next few weeks, but it's going to be like a flag formation, in my opinion. And then we could see a massive drop, just like we saw at the end of 2018. Who knows? That's the way I see it at the moment. Or will they be able to ramp it right back up to new highs? I doubt it. So expect a lot of volatility in the stock markets, and be careful if you're going to trade this. It's all over the place. You got to be watching it like a hawk almost 24/7 if you have access to the futures market. If you enjoyed this video, make sure you hit the like button. Think about subscribing to the channel if you haven't yet. Please share this video far and wide. And you can also follow me on Twitter, Facebook, BitChute, Steemit, and DTube. And I also have now a blog, MONERO64.net. I wish you all a great day. Take care. Bye.